everyone. I'm Anita Soni. I'm the Precious Metals and Base Metals Analyst at CIBC, and welcome to the 2025 CIBC Western Conference. Today we have Greg Smith, President and CEO of Equinox Gold, joining us, and I want to thank everybody in the audience for sticking around and not hitting the bar or hitting the slopes, and we'll kick it off with Greg. So firstly, Greg, congratulations on this, on the past year. It's been a really transformative year for your company. You finished completion of Greenstone, you ramped up the asset, you hit commercial production, you consolidated that asset. So a lot of milestones this year. So congratulations on that. And with that, let's talk about Greenstone. It's a flagship asset. So can you just talk about the process to getting to commercial production, which you recently announced in Q4? And then talk about your, sort of the guidance that you had put out in 2024 and how you got to where you were and the key things. Sort of walk us through it.
Sure.
24.
Well, first of all, thanks for having us here again, and happy to be here. 2024, big year for Greenstone. I'd spent the previous 2 years building it, and then in April last year we put first ore through the plant. And since that time, I've been progressively increasing the throughput at the mill and also the mining rates in the open pit. And I mean, it definitely is a big job. It was a big job to build it, and it's been a very big job to continue to commission it, to get to commercial production, and then to continue to ramp up. And I mean, the process is you start, you keep leveling up your production. The open pit's kind of easy. As we increase our fleet, as you open up the pit, you get more efficiencies, you get more production. That's an easier part of the story. With the plant itself, we kept hitting our next sort of production level, you find out what's not working as well as you wanted to, or where you're seeing called premature wear and other bottlenecks in the circuit. And so those sort of manifest, you deal with them, you move on to the next level of production, and then you do it all over again. So we've been doing that now since April, I look at it kind of daily, and I've got a nice scatter plot that I look at, and the trend just keeps moving up, and so we're happy with the way it's going. I would say it's taken longer than we had anticipated, and we had to adjust our guidance in October to address that. Probably not taking as long as many people thought it might, but it did take longer than we had been planning. So made that change in October, and now we're sort of have taken that pain and are moving forward.
Yeah, the big assets, they take 2 or 3 years to really hit the stride. So yeah, it's no small accomplishment to get it to where it is today. So I just wanted to spend a little bit more time on Greenstone. What are the major accomplishments and the major challenges that you've experienced at the asset, and what are you concentrating on in 2025?
Yeah, I think in terms of the commissioning, you look at it between the mill and the mine. And at the mine, 2024 was pioneering a new open pit, and this pit was maybe a little more complex than some other sites because it had had mining on it previously. And so there were historic tailings that were overlaying our open pit footprint. There was also some contaminated soils, and so we had to deal with those at the same time we were trying to pioneer the first benches of our mine. And the work that it took to kind of, it's a delicate job, so it takes a lot of sort of finesse and equipment and logistics to mine that material, and then trying to mine waste. And we were also trying to mine clean waste for the tailings facility. It was part of our construction of the tailings facility, the buttressing. So it took a little while to kind of open up the pit. Did that through most of 2024, and as it's been opening up and as we've added new equipment, we've seen those mining rates go up and that efficiency increase. So that was one challenge in the open pit, not unexpected, but just something we had to deal with. In the plant itself, in the middle of the summer, we had a couple things that came up with one of our mill motors, and we had to address that pretty quickly. And we had some issues with programming and delays associated with programming. That was actually a major challenge in getting through the initial stages of the commissioning. As we ramped up production, it was actually premature wear in the mill screen decks and in our cyclone feed pumps and some other areas that we had to navigate, and that was really just changing out those parts for more fit for purpose parts. And now there's not a big thing I can point to. It's you know, we've now sort of hit some extremely cold weather, and we're seeing what areas of the plant maybe weren't as well insulated as they should have been, and kind of addressing those issues. But it's more small things, and really what we've demonstrated is capacity in the plant is fine, like on a per hour basis or a per day basis. It has no problem processing the material at the rate we want it to. Now we're navigating as downtime, you know, time where we have to take things offline, time where we have to make these parts changes, that type of thing. So reducing the number of days where we have downtime, and then just continue to increase that average throughput. So though that, you know, nothing big, probably the normal challenges you'd encounter, but it's been a process. So that's where we are. The only other thing I could point to is just personnel, you know, and getting skilled people in Canada was definitely challenging, and you know, they do command top dollar for some of those positions. We have had to bring some people from outside the country, especially in the maintenance department. And what we're finding is that, you know, in some cases we've had higher levels of absenteeism than we were expecting. We're realizing we need to maintain probably a little bit of a larger workforce than we thought to get the productivity of the fleet in the mine. But, you know, things like that. We're going to have a camp now that we weren't intending to, and that's, again, is to accommodate the fact that we need to expand our reach to bring in those skilled people to the mine. So we will be maintaining the camp, but I think you've seen a couple times. It was supposed to be gone. It's going to be there for a while now. Yeah.
So just moving to Los Filos, I wanted to touch on that because that's the next catalyst, I think, that's coming up. Ross, your chairman, noted that earlier this year when you guys put out your guidance for the year that Los Filos could potentially be put on care and maintenance by March 31st if the negotiations with suppliers don't reach a positive conclusion. Could you just elaborate on that, just give the market a little bit of an idea, like just sort of reiterate what Ross was saying, because it's pretty key.
Yeah, no, and he's right. I mean, I just clarify that the primary negotiations were in the process of, are with the communities, the three local communities, not suppliers. And, you know, the simple story is, and we've been very public about this, is that Los Filos requires investment to build a CIL plant, because as we go underground and as we get deeper in the open pits, the grade goes up, the copper content goes up, and this material does not lend itself well to being on a leach pad. Yeah. You know, the recoveries are too low and the costs are too high. In addition to that, so it needs the investment, and we have these land access and social support agreements with 3 local communities, and they're coming up for renewal. And the current terms of those agreements result in an economic burden and a restriction in the flexibility to operate, which increases operating costs that are too high to justify the investment. So we've been working with the communities, we've been working with the local municipality, the state of Guerrero, to renegotiate those agreements for the long term so that we have an economic and operating stability to make that investment. And it's been a process. I don't want to negotiate from a podium, but
exactly.
we've had you know, we've had some good progress with 2 of the communities. One of the communities has been more challenging, and frankly, we're in the final kind of weeks here of coming to some kind of resolution. And I can't give any assurance that we're going to get there. We did complete a negotiation with the union, whereby we are able to make layoffs, and we are making layoffs. These are layoffs right now that we would like to make anyway, again, to right-size the workforce. But you know, if we're not able to get an agreement done, we're in a position where we can wind the operation down. So you know, Los Filos is a great mine. It's a big deposit. The new administration in Mexico just recently announced this Plan Mexico and have designated Guerrero as like a state of focus for development. They want mining as a priority. So there's 2 different things happening here where they really want to promote mining in Guerrero, and we're trying to do that. We want to obviously continue operating. We want to expand the mine. It's a great deposit, but we can only do it under the right economic and social conditions, and we hope we get there, but you know, we won't know until we know.
Yeah, and I misspoke earlier. I said that you had issued guidance, but you have not issued guidance.
We haven't issued guidance yet, but we are being very clear with, you know, in our public disclosures and as we speak to the market that you know, Los Filos could go 2 directions this year. Yeah. It's either moving toward residual leach and a wind down of mining, or we're going to, you know, get back to it and start to advance the expansion.
Yeah, and I think Ross also mentioned that the easier to process ores actually already started to wind down. Like this may be a year where it's a little bit more.
This year would be a year of, we need to do some stripping, right? And because of these agreements, we haven't invested as much into stripping in the last year as we should, right? As you normally would. And so if we get to agreements, it'll be an okay year. It won't be as good as 2024 was in terms of production, because we're going to have to spend some time stripping. And we're not doing any stripping right now. And that's because we're not going to obviously invest that at this point until we have some clarity on those agreements. So one way or the other, we'll come to a resolution here probably within the next month or so, and we'll inform the market when we have something to say.
But it's supposed to be a good year at Greenstone.
Yeah, no, I mean it's Greenstone and actually even the rest of the portfolio that gives us the air cover this year to do what we need to do at Los Filos. So,
yeah, am I thinking incorrectly? But Mesquite, I think we should have
Mesquite will have a good year too. We spent the better part of 2024 stripping the ginger pit, and as we exit this quarter, we end up into the guts of ginger, and yes, so Mesquite has a better year too.
Okay. Moving to Castle Mountain, can you talk about how the phase 2 is permitting? The phase 2 permitting is advancing at this stage, and when could we expect another update, or just remind us of the timelines and how you're thinking about Castle Mountain at this point?
Yeah, so Castle Mountain is a development project we have in San Bernardino County, California. We have been operating a very small. We call it a phase 1 operation there, but really the prize is this phase 2 expansion, which would take Castle Mountain to 200,000 ounces per year, and it's got a nice big reserve, long mine life. So that's a mine we're really excited to get building, and we had submitted our permit application a couple of years ago, and we got a very rapid response from both the state of California and the county, the San Bernardino County. We had their notice of completeness within 6 months. The BLM took a lot longer, and there's a number of reasons for that. None of it has to do with our permit. It really had to do with the capacity of the BLM and their ability to actually process it. And so we did finally get that in 2024. The next stage is to get what's called a notice of intent, and that's issued by the BLM. And that kicks off the formal permitting process, which is like a regulated 2-year timeline, and which includes the EIA assessment by an independent engineering firm and the public consultation. So we've been working very closely with the BLM. The market doesn't really see it. There's not a lot to talk about, but we've had regular interaction. We do have a broad schedule with them. We do anticipate getting this notice of intent in the first half of this year. I say that given we thought we were going to have it in Q4, then we thought we were going to have it in Q1, and now I'm expanding that to the first half of this year. So, don't put it on a calendar. Like we're trying to get it done as quickly as we can, and so is the BLM. I mean, they are keen to get it done as well. But once that's in, that sets a timeline. Hopefully, that takes us to kind of the end of 2026, maybe early 2027. In the meantime, we're going to advance the engineering. We'd like to be in a position to build Castle Mountain once that permit comes, and we'd like to have as much detailed engineering complete as we can at that point, kind of like how we were with Greenstone. We were at about 85%. We'd like to be in a similar position with Castle. So the next 2 years, the permitting will continue in the background. In the meantime, we'll update. We've been doing front-end engineering. We're going to update that with some detailed engineering, hopefully come out to the market. If it's not 2025, probably sometime in 2026 with a kind of an updated study, technical report, and then hopefully be in a position to make a construction decision 2.5 years from now.
So moving to Brazil now. So Arizona was coming out of was coming out of a transitional year in 2024, where you had a little bit of challenge at the Piaba pit, I think it was. And so, can you just talk about where it is in the mine plan now, and what it looks like in 2025, and how that sort of remediation has been going?
Yeah, so Piaba is our main open pit. We did have some movement in the southern wall in 2024, which required us to pivot to our Tatajuba open pit, which is a new open pit, a long strike from Piaba. As a result, we did lose maybe 4 weeks of production during the year as we transitioned, but the more meaningful effect of production was just the grade at Tatajuba was lower than the average grade in Piaba. In 2025, well, backing up, we've done a lot of remediation, which included drilling some dewatering wells, some recontouring. We're putting in some additional water management in that area of the pit. And so we're back into the western end and the eastern end of Piaba. We're not back into the central part of Piaba yet. That'll be something that we'll look at once we're through this rainy season, which will take us into kind of early summer. And then if everything we've done looks good and we're happy with the results in the rainy season, we can get back into the main part of Piaba. Right now, 2025 will reflect some mining in Piaba, primarily still Tatajuba. And so it won't be back up to like 130,000 ounces, but it'll be better than 2024. So it's coming out of it. It's been a bit of a process, but happily, Orizona's got a lot of prospectivity, and we were able to get into Tatajuba, and we've got some other regional pits, Genipapo, Macote, our Boa Esperanza pit. So we have other ore sources that are mitigating while we remediate Piaba, and then we can get back in. And then once we're into the dry season this year, we're also going to start portal development and start the decline to go underground at Aurizona, and that'll be a new phase at the mine, and the initial development and hopefully some bulk sample mining at Aurizona will happen in kind of late 2025, early 2026. And then from there, we can organically expand the underground. We can accelerate it with some capital. We'll evaluate that once we get underground, get our hands on it, and see what the ore body looks like.
Okay. Can you talk about some of your CapEx requirements in the coming months and the debt repayment schedule? So I understand debt repayment is the company's number one priority. Was it a company's number one priority in 2024 and starting to focus on that in 2025?
I mean, we'll have formal guidance out in February. Okay. I would say, we're off the big build at Greenstone, so our capital's coming down. This year's kind of it'd be some pre-stripping at some of our mines. Tailings later this year, we'll start the second lift at Greenstone. There's a tailings lift at Aurizona, things like that, normal course. I think at Greenstone, we have a couple of things that are sort of residual from construction. We've got to replace the Hydro 1 substation, and we're doing some work with the police station, that type of thing. But nothing individually big in any one mine. It's the normal course capital you would expect in a portfolio of 7 mines. But debt repayment is something we're very focused on this year. We did convert one of our notes in Q4 and made a payment to Orion, and that knocked $180 million off of our debt in the fourth quarter. And we've got another convertible note that comes due in September, and so that it'll either convert or we'll pay that down with cash. In the meantime, we will be, again, normal course extension of our revolver will happen in 2025. We're going to look at potentially terming out the term loan we took out to buy the rest of Greenstone. That might be a high yield note or some instrument. But generally speaking, get rid of the second convertible note, park as much cash as we can on the revolver, and just continue to reduce our overall debt liability. In the meantime, our debt to EBITDA ratio is going to be going down significantly just with the increase in production and EBITDA from Greenstone.
Okay. So the M&A question, I think for you guys, it's well, actually, I don't know what it would be on the which would be the acquirer or acquiree, but I guess I would ask. I know that Greenstone's an asset that would be coveted by many senior players. So would you be a willing seller at the right price? Or would you continue to think about growing and being an acquirer?
I mean, I guess the answer is everything has a price. I mean, we're a commercial company. We've bought assets, we've sold assets. People think we haven't been as active on M&A, and I suppose we haven't done a corporate transaction since 2020 or 2021, since we closed the Premier deal. But we did do our largest transaction to date in 2024 when we consolidated ownership of Greenstone. It was a huge transaction, but people tend to forget that was an M&A transaction. Yeah. I mean, we're always commercial both ways. If we see an opportunity that we think makes sense for our shareholders and for the company, then we'll look at it. And if there's ability to divest some assets that make sense. I mean, Greenstone's our flagship asset. I don't think we would just sell Greenstone independently. But we have a kind of an overall vision of being a 1 million ounce plus producer, and so we've continued to buy and sell companies and assets to get to that point, and we're not there yet, but eventually we do plan to be. So, I mean, it's always a hard question to answer. I just say that Equinox has always been commercial. We've built this company on M&A. We haven't done a lot corporately in the last number of years, and so that's always a possibility. But our primary focus right now is let's get Greenstone humming the way it needs to be. Let's start reducing debt, and so that if we do anything, we're on our front foot. Right?
Yeah, and I guess the flip side of that is, given the amount of assets that you have in Equinox, and are there any assets that you consider non-core? I think I always ask this, and it's always the same answer.
Well, I mean, yes. we've certainly got some smaller assets. We've got some more mature assets. When we zoom out, and it's not a mystery. We have Greenstone, obviously. We've got Castle as a nice chunky development project, long life. Filos is one that we're navigating, and then as you go south, Aurizona is a great asset, lots of potential, and it can be a 130, 150,000 ounce producer. We've also got Santalo and Fazenda, and those have been kind of two separate mines for a lot of years. And but what we're seeing at both is a lot of potential for mine life extension. We're also seeing some potential for expansion at Fazenda. We are working to integrate those two assets into one operating unit, the Bahia Complex.
Okay.
It creates a number of cost and administrative benefits and also some tax benefits. And so when you look at Brazil, you've got Aurizona, and then you've got the Bahia Complex. The Bahia Complex on its own is 130 to 150,000 ounces today, with some potential to increase that. So you've sort of got the four: Greenstone, Castle, Aurizona, Bahia Complex, and then Filos to sort out. And so anything else, and Mesquite's been a great mine for us. We have RDM, and they make money, and they're great operations. They're just not as large as the other ones, right? So they command less attention. But we've, in the past, when it's made sense, we've divested individual mines, and so again, we're always commercial.
Yeah, I actually had a question on Santalo, but I skipped it because I was worried about time, and I wanted to get to other ones. But so going back to Santalo then, so you were trying to improve the desliming circuit, and can you talk about that and where the improvements are, or if you're talking about a Fazenda complex, maybe are you thinking about shipping ore to Fazenda instead? Or?
So we made two major changes to the processing circuit in 2024. We installed a new trunnion, which increased our throughput and actually made it much more efficient. And we did install a desliming circuit. And the trunnion has worked fantastically well. The desliming circuit, when we turned it on, it was skimming too much. And the reason was, when we put the trunnion in, we actually were ending up with a finer grind than we had anticipated when we first were looking at the deslime circuit. So we actually took it offline so that we can determine how we're doing without it again, and we've actually been able to increase recovery pretty well, even without it. Okay. That's not to say we're not going to use it. So we are going to be going back through some tests of re-engaging the desliming circuit, because we still see that potential to increase recoveries by about 5 or 6%, like gross, from that circuit. So that's a work in process. For those that don't know, Santalo has very high organic carbon in the main ore body, and it's a resin and leach plant, and it's quite finicky in terms of the recovery. So the other thing we're doing at Santalo is doing some exploration north of the plant, and we've got a number of targets there that are much lower in total organic carbon. So the recovery of those ores and blending those ores with the higher organic carbon material can increase the overall recovery, and that's a nice benefit to developing some of these ore bodies, in addition to the one we already have at Santalo, the main pit. And then Fazenda, it's a totally different ore body, but we have all the land between them, and so it's a very prospective area. And as we kind of develop that, we do have the potential to triage between the two. Initially, though, you're still going to have really two distinct processing plants, really, with the surrounding ore bodies going to those plants. Longer term, we'll see if there's some triage that does make sense.
Okay. I'm going to skip to a bigger picture macro question that I'm asking everybody. With Trump taking office this week, do you anticipate any challenges in terms of supply chain constraints with tariffs and things like that? Or, and then conversely, benefits.
Yeah.
You know, obviously the Canadian dollar would be one that, you know, most people would say.
If it weakens, yeah.
Yes, yeah.
I mean, it's been nice this year, or last year so far.
Yeah.
We've, you know, we do have a vice president of supply chain, and he's been pretty actively looking at where we have exposure. So far, it really depends what Canada does, because the biggest effect we see it having would be on Greenstone, and that would be if we're importing reagents or other consumables into Canada to use at Greenstone, and Canada slaps tariffs on them, we're going to be spending more money. And, you know, for example, we do buy our cyanide out of the United States.
Yeah.
So there are some things that we do bring into Canada from the U.S., and it really depends on the Canadian government's reaction to anything the U.S. does, and we don't know what that looks like yet. You know, our assets in the United States are probably less affected, and the same thing down in Brazil. Most of it's within Brazil. We're not importing a lot of stuff from the United States, and even if we were, Brazil would have to, you know, have tariffs as well. So, you know, the U.S. dollar effect of those tariffs, and I know they were talking about that at the lunch today. You know, from a Canadian perspective or Brazil, like the exchange rates have been pretty favorable to us over the last couple of years, and I think. You know, it appears that's going to continue, and so we're happy to have those tailwinds from a foreign exchange perspective. You know, if the U.S. dollar strengthens, who knows what happens to gold, right? That's the other side of the equation, and so far gold's been very resilient with a strong U.S. dollar, and you know, hopefully that continues in the event that the U.S. dollar continues to strengthen. But you know, to answer your question, there's probably some exposure, but it doesn't seem like it's very material at this point based on kind of our assessment. But it's something that we're looking at, and we'll just have to see what happens when these tariffs, if they manifest, what we do in return or in response.
I think this is my last question. So what catalysts can we expect from Equinox this year?
Well, I think Filos, one way or the other. It'll be good to get clarity on that, I think, for everybody. And then, you know, just continuing to ramp up Greenstone. I think we'd like to get out a technical report potentially on a combined Bahia complex sometime this year, maybe early next. But otherwise, our focus this year really is on let's operate efficiently, effectively. Let's make some cash. Let's pay down some debt, and let's just make sure that Greenstone is ramping up in a responsible and efficient way. And you know, otherwise, if there's other opportunities out there, then we'll look. But that's, you know, our core focus this year is really on our operations, and then also debt reduction.
Okay. Are there any questions in the audience? I think we still have 2 minutes. I'm going to ask you one last one.
All right.
What's the key? What do you think is the key driver for Equinox to continue to realize shareholder value? What do you think the market is missing right now, or wants to see from you guys?
Yeah, I mean, our multiple is definitely lower than our peer group, and we haven't enjoyed the same re-rate, I would say, as some of the other companies that have brought new mines into production. Based on you know, our discussions with the market, I think it comes back to some clarity on Los Filos, one way or the other. You know, seeing Greenstone continue to ramp up, and I think also just starting with the debt reduction will have a big effect. So as you pay down your debt, as more and more of our production and cash flow is realized in Canada, I think it's inevitable that we'll start to see that multiple start to shift. And otherwise, it's this Los Filos question that is probably the most challenging thing to talk about in the company, and probably the question we get asked the most. And whichever direction it goes, it'll be good to have that clarity, and then we can, you know, forecast and be able to kind of provide more certainty to people in terms of what the company looks like over the next few years. So I think as those things happen over the course of 2025. I would expect us to hopefully enjoy some of that multiple expansion that some of the other companies have had, and if we don't, then you know, we'll just keep doing what we're doing, which is strengthening the balance sheet and investing in our assets. So.
Yeah. Okay. Thanks. That's it for my questions, and thank you for joining us.
Yeah, thanks a lot.
Okay, thanks.